Look, let me tell you something straight, and I don't care if this makes you uncomfortable, because comfort is exactly what keeps people broke. If you think $90 silver means you're about to get rich, you're already late, already emotional, already playing the wrong game, and that's exactly why coin shops are sounding the alarm while social media is screaming to the moon. Because here's the brutal truth nobody wants to say out loud. Price is not value, hype is not demand, and headlines are not liquidity. And right now, the silver story being sold to retail investors feels exciting, feels powerful, feels like revenge against inflation and the system. But behind the scenes, the people who actually make markets are stepping back, crossing their arms, and saying, "Not like this." And that should scare you more than any crash chart ever could, because think about it. Really think about it. If silver at $90 was such an obvious slam dunk, why are coin shops hesitating? Why are spreads widening? Why are buy offers cautious, delayed, conditional? Why are the same shops that begged you to sell at $25 suddenly quiet at $90? And don't tell me it's manipulation without understanding the mechanics. Because what's happening here is a power shift you weren't prepared for, a liquidity test most retail investors fail, and a psychological trap dressed up as a once-in-a-lifetime opportunity. And this is where I need you to stop nodding and actually visualize yourself in this moment. Imagine you're an average American household in 2026, rent just jumped again, groceries are still stupid expensive, your credit card APR is north of 22%, student loans restarted, your 401k looks fine on paper but feels untouchable, and you finally feel smart for holding silver, for being early, for not being one of those sheep. And then the price hits $90 and your heart rate spikes. You start doing the math, you start imagining relief, payoff, breathing room, and you walk into a coin shop expecting validation. And instead you get hesitation, conditions, a different tone, a look that says slow down. And that moment messes with your head because it doesn't match the story you were sold online. And here's the harsh financial reality most people never learn. Markets don't reward belief. They reward positioning and timing and liquidity, and coin shops are not there to confirm your bias. They're there to survive volatility, protect capital, and manage inventory risk. And when prices move too fast, especially on hype-driven momentum, smart intermediaries widen spreads, lower bids, or step aside completely, not because they're scared of price, but because they're scared of unstable demand, because they know something retail investors hate admitting. That parabolic moves attract weak hands on the way up and force sellers on the way down, and the middle gets crushed. And you need to understand this, or you will repeat the same financial mistake you've been repeating your entire adult life, just in a shinier wrapper, because this isn't just about silver, this is about how you react to money, how you chase validation through assets, how you confuse being right with being paid, and how you keep letting urgency override strategy. And yes, silver may go higher. Yes, $90 might not be the top, but that's not the point. The point is this. When coin shops sound the alarm, they're not predicting price, they're warning about conditions, about liquidity, about exit reality, about what happens when everyone wants the same outcome at the same time. Because here's another uncomfortable truth. Most people don't lose money because they pick bad assets. They lose money because they don't understand exits. They don't understand who the buyer is on the other side of their dream, and they definitely don't understand what happens when retail enthusiasm outruns institutional patience. And you've seen this movie before, even if you don't want to admit it, in meme stocks, in crypto cycles, in housing FOMO, in every moment where headlines got louder just as risk quietly increased. And the reason this hits so hard is because deep down, you know you've been here before. You know what it feels like to be up on paper and frozen in real life, paralyzed between greed and fear, waiting for one more push, one more confirmation, one more YouTube video to tell you it's okay. And that's why this conversation matters, because silver at $90 is not just a price, it's a mirror. It's showing you how you handle uncertainty, how you react when the crowd cheers, but the gatekeepers hesitate, how quickly pride turns into denial, and how dangerous it is to confuse a macro thesis with a personal financial plan. Because let's talk about that for a second. The macro story sounds beautiful. Inflation hedges, industrial demand, monetary debasement, green energy, all real, all valid, but macro stories don't pay rent, Execution does, and in the real American economy of 2026, execution means cash flow, flexibility, and timing, not screenshots and bravado. And this is where the guilt creeps in if you're honest with yourself, because you didn't buy silver just for protection. You bought it for hope, for relief, for a shortcut out of pressure, and there's nothing wrong with wanting that, but there is something dangerous about building your emotional future on a single price level, especially when the people closest to the metal are telling you the market is thinner than it looks, and thinner markets snap fast. And here's the pattern interrupt you need to hear. What if the real warning isn't silver will crash, but silver is exposing who understands markets and who just wants to be right? Because the difference between smart money and emotional money is not intelligence, it's patience under excitement, discipline under pressure, and humility when reality doesn't clap for you. And I want you to sit with that for a second, because the next move you make, hold, sell, hedge, rebalance, do nothing, will say more about your financial future than the price of silver ever will. And here's where the urgency kicks in, because moments like this don't last. Volatility windows close, spreads normalize, narratives shift, and the people who win are the ones who already decided what they would do before the number hit the screen, not the ones scrambling after. And if you're waiting for certainty, you've already missed the lesson, because certainty never shows up in real markets. Only probabilities do. And the biggest mistake you can make right now is outsourcing your conviction to hype while ignoring the signals coming from the actual point of sale. Because coin shops don't make money being dramatic, they make money staying alive, and when survival instincts kick in, you should pay attention. Not panic, not celebrate, but think. And here's the final thing I need you to hear before you scroll, before you rationalize, before you tell yourself this doesn't apply to me. The alarm isn't about silver, it's about you. About whether you're building a strategy or chasing a moment. About whether you're using this rally to get stronger financially or just louder emotionally. And the uncomfortable question you have to answer next is this: if silver stays volatile, if buyers stay cautious, if exits stay messy, do you actually know what your next move is? Or were you just hoping the price would make the decision for you? Because in the next phase, hope is going to be very expensive, and the people who ignore this warning will learn that the hard way.